Good day, everyone. In this tutorial, we'll be dealing with Cosmos manufacturers. So before we start with the question, I would like us to start with the required. The required says prepare production cost statement for the period ended 28 February 2020. Also calculate the unit costs of production. So back to the question now. Cosmos manufactures twice. Their financial period ends on the last day of February each year. The following information was extracted from the accounting records for the period ending 28th February 2020. Inventory on the 28th February 2019. That's the inventory. Please do check the end date and the beginning. So this one is the beginning of the year, 28th February 2019. Is the end of the last or the previous financial year. So these figures, in other words, they are our opening figures. Raw materials, work in progress, finished goods, factory consumable stores. And then during that year, we purchased raw materials and the factory consumables. And then we incurred the cost when delivering the materials to our stores, termed the carriage on raw materials, all right? And then there were raw materials that were returned to the supplier. The factory wages, this is the direct labor, salary of the factory supervisor, factory electricity. Now it's 80% is for the factory, maintenance of the factory equipment, rent for the factory, refreshments for the factory, depreciation, factory equipment, office equipment, inventory on the 28th February 2020. Remember, earlier we had inventory on the 28th February 2019. We now have the one at the 28th February 2020. So this is our closing balances: raw materials, work in progress, finished goods, and factory consumables. Additional information: electricity of the factory was still owing, it was 3,560. Then the total units produced were 3,500. So guys, coming to our solution now. This is the format. Your heading will be the manufacturing cost statement. So the first thing we always do, we start with the opening balance. So we have the opening balance of raw materials, all right? There's the opening balance of raw materials. And where does it come from? It's here. It comes from this opening balances, which were the closing balances for 2019, 32,000 as it is, all right? Then during the year, we purchased raw materials of 900,000. You have to add purchases, all right? We add purchases of 900,000. Also, we add the cost incurred on transport, which is carriage on raw materials. We have to add this cost, all right? We have to add this cost. They form cost of our materials, all right? And then during that year, we also returned to the supplier. These were goods that we returned to the supplier. We returned the goods costing 22,110. So this one, you have to less it, all right? You have to less it. I'll highlight it in red to show that we are lessing it. We less it because it is no longer in our store. We have returned this to the supplier. So after returning this, we have the raw materials that are available. After returning the ones that maybe had some faults, we have the ones available in our store. Now, remember, we are preparing this for the whole financial year. We have the closing balances here at the bottom, closing raw materials, all right? We have our closing raw materials. As it is, we have to less it from the materials available. Now it means that this closing one, they were never used, all right? There will be the opening materials for the next financial year. So now that's why we have this term here, raw materials issued or used. These are the materials that we have used, all right? I want to highlight with different color. These are the materials that we have used, all right? So to the materials that we have used, guys, you have to add the direct labor, and then you get your prime cost. Now, remember, earlier on, when we were calculating the prime costs with other topics, we said prime cost as the direct materials, all right? In our case, is raw materials plus direct labor. It's our prime cost. So you see that the formulas we have been using earlier on do not work in isolation. We have to apply them here. All right, so this whole thing, we used it to calculate our prime cost. We're moving on to calculate our manufacturing overheads, all right? We have to calculate our manufacturing overhead cost, all right? So for the manufacturing overhead costs, we are going to name them all. Remember, these are the costs that cannot be directly traceable to the product, all right? So we have opening in the opening factory consumable stores, all right? In case you are worried, where do I get those? They are right here. The opening balances 3,400. To this opening factory consumables, you have to add the factory consumables that were purchased of 35,450, all right? So we're adding here. It doesn't make any difference because we're all going to add all these items, right? And then we have salary for the supervisor. We know it's an overhead. It is here, the salary for the supervisor as an overhead. We have the factory electricity. Now, with this one, I would like to elaborate more on it, all right? So I want to make the screen to be a little bit bigger so that I can elaborate, all right? The salary, they said that 80%, all right? 80% of our salary is for factory, right? So guys, it means that of these 56,700, this is our 100%, it's our 100%, right? So we need to calculate what? Our 80%, all right, for the factory, all right? So how do we calculate this? I will term it as X, is our 80%. We need to calculate X, né? So how you do it, you're going to have your 80%. We're going to have our 80% multiplied by 56,700, all right? So that's the formula that you are going to use, all right, guys? So then when you do that on your calculator, you get the 45,000, uh, 360, all right? So there's the figure that we have here. This is the figure, I'm sorry, for 48, it's supposed to be 45,000. It's 45,360, all right? This is the figure that we have. So then we have a maintenance on factory equipment. We have it as here as 22,560. And then we have factory rent and refreshment for workers, all right? We have refreshment for workers. Moving on, now we have our depreciation for factory equipment. Remember, guys, we cannot include the depreciation for the office equipment as it is a non-manufacturing cost. We're only dealing with manufacturing, all right? So that's why we have our depreciation for factory equipment as it is. Then we less the closing. Now, this one, I also want to highlight it in red because we have to less, all right? We are lessing the 4,400 from all these figures, all right? These ones, all of them, we add. Remember, we have to find the total manufacturing overhead cost. So we add all these ones, and then we're going to less the closing balances. In other words, all the closing balances are to be subtracted. So here they are, factory consumables of 4,400, all right? We have to less it from all these things. And then after doing all the calculations, our manufacturing overhead cost would result to 39,000. It's 399,110. All right, this is our manufacturing overhead cost. Please take note of this. I also want to bold it so that you can be able to see. All right. So moving on now, we are not done with our manufacturing cost statement. We have found our prime cost and manufacturing overhead. Remember, inventory exists in three forms, all right? So we now have our work in process. There's the opening work in process. Here it is, the opening work in process of 43,000. We have it here, we less the closing work in process. Remember, I said all the closing balances have to be subtracted. Here is our closing work in process, and then we are going to get what? This column here is very important. It's very important as we are going to get the cost of goods onto the cost of finished goods, all right? So this is the cost of finished goods. Please do pay attention to this column, this row. You need to know it, all right? There's the cost of goods finished. And then to this cost of goods finished, all right? We add the opening finished goods, all right, from the previous year, all right? From the previous year is here, finished goods. Remember, all this was for the current year. Now we have to add also the opening. Remember, in our store, when you open, we had these goods of 135,000. They were here. And then we need now to less the closing finished goods of how much? Of 154,000, all right? There's our closing finished. I also want to highlight it in red. So it's our closing finished goods, all right? This one, we have to subtract. So in other words, all the closing balances, we do subtract, all right? So, and then we have our cost of goods sold, all right? We have our cost of goods sold, this one. So you may be wondering how we got the 167,389,3980, all right? So this one, we got it after adding. We added our manufacturing overhead cost plus our prime cost right here, all right? You add these two, and then you less this one. You'll get, then you have to add also this one, then you subtract this one, you'll get this figure as it is, all right? You get this figure as it is. And then moving on, guys, we have answered the first question of calculating the cost of goods sold. So in a nutshell, This is how you calculate the cost of goods sold. We were also required, all right? We were also required to calculate now. We were to calculate the unit cost of production. So how we calculate this? Remember, of this so of this 654,980, this is the total. It's the cost for all goods, right? So now we need to know per unit how much did we spend, and it was only for 3,500 units, all right? So it was only for 3,500 units. So we need to find the cost. When you press your calculator, you get that we spend only 472.85 rands on, or it's per unit, all right? So this is all that was required of us, and I would like to end here. Thank you for your attention.